about municipal bond? Have you seen much interest or a change of interest from clients into muni debt?
No, it's been pretty stable. We haven't seen much of much change there at all. Just continuing flows coming into the funds in general. There's been some headline risk in terms of what's going on in Puerto Rico and the issues in Detroit, but those are one-off type issues, and overall it's just steady as she goes for the most part.
Has the asset allocation, bonds versus stocks, changed much now compared to 5 years ago? And where do you see that heading 5 years out?
I think people during the global financial crisis, they quickly realized they were under-allocated to bonds, and they quickly realized that there is an important role for bonds in a portfolio for that stabilization and diversification that we had talked about. And so what you've seen is that investors have migrated and embraced bonds, more generally, and you've seen that shift out of money market funds because they are very low-yielding instruments into longer-dated bonds. And we'd expect that to be a stable asset allocation. We don't expect that to change dramatically in the next several years.
How about the products themselves? Where do you see products in the fixed income space evolving?
Well, in general, the markets are pretty well evolved already. I mean, you have various slices and dices of the market, whether or not you want to be by maturity segmentation, whether or not you want to be in governments versus corporates, high yield. So the market is pretty well segmented. So it pretty much offers whatever any investor might want to pick and choose from at this point in time. So I can't imagine there being a huge amount of innovation in the fixed income space over the next couple of years because it's a pretty well developed market at this point in time.
Any concerns clients are underestimating some risks? You mentioned high yield, which has been a relatively safe place to be despite its name. But have people become almost lackadaisical in chasing that higher yield?
I think people have to keep in mind that when you're investing in an asset class like high yield, it is riskier. It tends to have a greater correlation with the overall equity market, and you just have to be very cautious, especially when you're getting into the point now where yields have come down dramatically over the last 5-6 years, and you're getting towards the tail end of the cycle. And clients need to beware at that point because they're chasing returns, and it's very unlikely that those returns that you're going to see for the next 3 to 5 years are going to mimic what they've had over the last 5 years or so.